Dan Clifton joins me, head of policy research at Strategas Research Partners. This is a Baird company. Dan, it's great to have you on. Let's start right there with trade and all of these headlines.
Yeah, so first, thanks for having me on. I think we're going through a pretty significant couple weeks here on policy where you got trade, the Fed, the shutdown. But on trade first, if you just think about China, I think there was a risk a couple of weeks ago where China was talking about pulling those supply chains on rare earths. The U.S. was talking about high tariffs. What you're facing here is a status quo type of an agreement where they're going to delay their rare earth restrictions. The U.S. not going to put tariffs in there. You don't get much good out of it, but you've protected your downside risk. That's all the markets really need to see going into this. And the surprise upside would come from, say, reducing tariffs if there's an agreement on fentanyl. I think that's a lower probability, but that's where the upside would come from that China trade deal. I think to the point that Eben Javers was just making, and a very good point, is that Trump is signing a whole bunch of smaller agreements with other countries in the Asian region that start to put restrictions on China being able to transship those goods through those countries and into the U.S. So a lot of these agreements are really strengthening Trump's hands going into those discussions, and I think they're very important. And then finally, on Canada and Mexico, the president hasn't said that he's putting a 10% tariff on all goods coming in from Canada. We believe he's talking about the non-USMCA goods. Yeah. Those are a very small portion of goods that come into America, and that is somewhat declining, and it's part of the negotiations. And the reason why we believe that Canada and Mexico will be the greatest beneficiaries on the trade front is largely because they'll be the only two countries without a reciprocal tariff rate. They will have the lowest effective tariff rates in the world, and that's the president trying to bring the supply chains closer to the U.S. As we start to move into a deglobalized world. So a lot of headlines, a lot of noise, but when you break through it, getting resolution on these are going to be quite positive for equity markets.
You just said a lot there. I want to go back to China, though, especially because I think investors are very eager to see some sort of, I'll call it a trade truce, but I know people are using the word deal struck between the two countries. But to your point, when you see some of these other deals starting to potentially take shape that involve cracking down on transshipments, even here domestically, you start to see investments into key supply chains, like, for example, rare earths, which, yes, are going to take a couple years to stand up, but sort of go to this idea of countering China. Are we ever going back to a big, broad, meaningful trade deal with China, or is that in the past?
No, I think that's in the past. We're moving into a deglobalized world. It is not bearish, but the COVID was just this moment where you realize that there's risk of having your supply chains located outside the United States. Can you get pharmaceuticals? Can you get the minerals that you need? So what you see is a truce, as you call it, where they are slowly building their chip industry. We're slowly building our rare earth industry. And we're trying to do it in a gradual way so that there's not a disruption to the global economy, but each country is becoming more self-sufficient to deal with that deglobalized world. And the risk is that there's some flare-up over Taiwan or over whatever it's going to be, and then you have a major disruptive event to the global economy. And I think both leaders are trying to avoid that. I get nervous sometimes where you read in the Wall Street Journal last week that China is going to ask for Trump to change his position on Taiwan, which is extremely unlikely to happen. But, it seems like both leaders want a gradual process, and that's why it's more of a truce than a deal. And it's soybeans and shipbuilding and TikTok and kind of these minor issues that keep the status quo in place.